Welcome back. Hope you're having a fantastic day. The markets, traditional markets, are having a green day today. Bitcoin and crypto, not so much at this point. So let's jump in and take a look. We have about 45 minutes left till the closing, according to Eastern Standard Time. So this is the Dow right now. Let's take a look across the board. The Dow is up. This is an article I was reading on CNBC. The Dow is up 600 points right now, about 1.9%, S&P up 1.7%, NASDAQ up 1.35%. So monkeypox is in the news, talking about how that is spreading. Is that going to be the next coronavirus? It doesn't look like it. That one is not a good one. You don't want to get that. So stay away from all that. And, all the major news headlines today. The World Economic Forum is going on in Davos right now as all of the world leaders in finance and central bankers all meet to talk about what's going on in the economy right now and the uncertain times with inflation, the war, and all those things. Lots of headlines coming out of there right now. But as far as the big news, we have the FOMC coming up, and it'll be interesting to see what the Fed has to say at that meeting. And all of the different predictions across the board. JP Morgan, Jamie Dimon is saying that the bank will reach their benchmark yield for the year of 17, 18%, whatever it is they're targeting due to rising interest rates in their banking business. Scott Minerd of Guggenheim says Bitcoin could hit $8,000 in this market low. And, lots of news and predictions across the boards of what could potentially be happening. But let's take a look at the Dow. Okay, this is the weekly chart of the Dow Jones, and the Dow's coming off of 8 straight weeks of downward pressure, and with a green week starting out today. Of course, these are 5-day weeks. The NASDAQ, same thing. S&P, same thing. So the real question is, what is the potential and what does it look like if you put the weekly moving averages on? The Dow Jones has only broken in the last 22 years, the 200-week moving average a couple of times. This is the March pandemic where it broke. Then you have to go back to 2004 timeframe, or 2008, 2009 timeframe. That was the great financial crisis of 2008 and 9, where the markets broke 200-week moving average. And then before that, you have to go back to the dot-com bubble of 2000. 99, 2000, and the 200-week moving average was broken in 2002. The peak was in 2000, and it took till 2002 to break. If you look at the NASDAQ, which crypto, you could argue, relates more to the tech sector of the NASDAQ than any other index. Maybe S&P will take a look at that, but the NASDAQ broke the 200-week moving average in February of 2001. The peak was March of 2000. It broke it again back here in the 2008, 2009 financial crisis. The peak was in 2007. It broke in 2008, hit bottom in 2009. So it took a couple of years. And you can see the NASDAQ is approaching and working its way towards that 200-week moving average. Again, the March pandemic, it didn't quite reach it, but almost. Let's look at the S&P. S&P broke the 200 in March. In 2018, when the Federal Reserve pulled the plug on interest rates and started, raising interest rates and talking about reducing the balance sheet, the S&P touched the 200-week moving average back then. That was 2018. Then you go back to 2015, 2016 taper tantrum, and then, touched the 200-week. Then you have 2011, touched it, but it broke it, obviously, in 2008 and 9. And then when you go back to the dot-com bust in 2000, 2001, same thing. So really in recent history, the past 22 years, the major indices have only broken their 200-week moving averages during those extreme market conditions. So now let's take a look at Bitcoin. And if you look at Bitcoin, kind of the same thing. March pandemic broke the 200-week moving average. Let's put this on log scale so you can see it a little easier. Wicked down, came back up, touched it in 2018 when the Fed started raising interest rates and wanted to reverse QE. And then again, touched it in the bottom of the 2015. That was during taper tantrum market. And, again, 2017, 2018. So only 3 times in Bitcoin's history, because it's only been around for, since 2008 and 9. So it doesn't have that long of a history right now to go off of. So pretty much running in line with the tech market, with NASDAQ and with the S&P. So the question is Bitcoin going to make its way to the 200-week moving average? And if it does, when will it happen and what will be the price? And as you can see, you have this 50 and 100 getting ready to cross. And last time they did that was back here in the 2019 bottom. And it just about, the very bottom of that was right before the averages crossed together. So seems to be apparent that it's wanting to do that right here. So if this continues on in this fashion, this continues on in this fashion, then you could see somewhere around that area potentially is where things could cross. And if that's the case, let's just speculate here, as Ben Cohen likes to say, dubiously speculate, that that's around, August, September timeframe. That would be around 24,000 would be where that 200-week moving average is. So the question is, would that be a potential bottom for the markets? This 25,000 doesn't appear to be the bottom because the markets are continuing down. This is the 9th week that Bitcoin is working on of being down. Never in its history has it done that. It has not had 9 consecutive down weeks. I think the most it had was back here in the beginning, and you had 1, 2, 3, 4, 5. 1, 2, 3, 4. 1, 2, 3. Yeah, so it only had about 4 or 5 weeks of continued downwards pressure back in the beginning. It's never had 8 straight weeks down. So we'll just have to see how this week works out. So let's take a look at the daily. So this is Bitcoin on the daily here, kind of working out this area of consolidation here. And if you look at it on the hourly, a little bit of a sell-off right now, probably a long liquidation up here. Everybody was calling for a big bounce right here back up to the $32,000, $33,000, $34,000 level or more. So what does Bitcoin do? Liquidates just like it did here, liquidates just like it did here, liquidates. The question is, will this hold and turn around and pop back up like it's been doing, dribble its way back up, or is it going to continue down and test these lows again? So we'll just have to wait and see. Nobody knows. All you can do is just take a look at past performance to try to generate probabilities of what the future looks like. Let's take a look at Ethereum. Ethereum's following the same path. So Bitcoin and Ethereum are really kind of working their way together. And the real question is with Ethereum, where is that going to level off at? And here's Ethereum on the daily right here. And if you look at Ethereum on the daily chart, let's take it off the log and go to here we go. Go to linear chart. So Ethereum on the linear chart on the daily, it's hung up in this area of support. There's a lot of support in this area from about 1,000 up to about where we're at, where Ethereum is right now, about 1900. So a lot of support to get through right there before it can ultimately go down and potentially test this $600 to $700 level, which would ultimately be the unwinding back to those 2020 lows before the big pandemic run up. This irregular correction, I would argue the retracement should have reversed right here and rolled over into the bear market, but this was obviously a very manipulative move by the whales to get the markets back up again and generate exits. And now it's working its way down, still generating exit liquidity with consolidations and selling off to new entrants in the market, or people trying to resurrect their portfolio or pare their losses a little bit, trying to participate in this. So right now Bitcoin is hanging at the lower limits. This $29,000 level is a very highly contested level, a lot of support there, a lot of buyers obviously at that level. The question is, who are the buyers? Because retail, for the most part, just the general average person, has kind of left the market. I think a lot of smaller holders are buying this level, but searches are down, interest is down. A lot of people have lost a lot of money. A lot of people got hung up in here, and then a lot of people got hung up in here, and now people are getting hung up in here, and just walking away from the space right now because there's no telling how long this could take to work its way out. It could work its way out and continue down for the next several months, kind of like we saw last year in this area here before we could see any kind of a bounce. But the question is, will we see a bounce given the current environment with the Fed pulling the foot off the gas, reducing their balance sheet, keeping interest rates up, and trying to battle inflation? So right now we have to go with the trend in the market. The expectations are more continued downside and a little bit of ranging here with Bitcoin, running 6 or 7%. So basically buy, 28, 29,000, sell 30, 31,000. That's kind of been the play in this area here. Longs getting liquidated, shorts getting liquidated, mostly longs getting liquidated. Shorts haven't really been hit that hard, but these are where everybody's wanting to go long once price gets back up to 30, 31,000. A lot of people are calling for 40, 42,000. Let's take a look at the total altcoin market. This is excluding Ethereum. And we're looking at the same action there, but let's look on the daily here. And, just hanging right there on the cliff, just like a lot of the altcoins are. Avalanche is right there, hung up at that kind of last line of defense before it drops down to these lower levels of about $10 and ultimately $2 to $3. Solana, same thing, hung up in that $50 level, coming off that $35 level low. If it loses these levels here, it could potentially drop back down to $18 to $20 range. And a lot of people aren't thinking that these altcoins can go down much further than where they are. But if you think about that, if you drop down to about $20, I mean, that's still another 50% from where we are, where these coins are right now. Avalanche, same kind of thing. If Avalanche dropped another 50% from where it's at right now, it puts it around 50%, puts it around, $14, and dropping back to, $4 or $5 puts it down another 80% from where it's at now. So the question is, can some of these coins drop another 80% from where they are now? If you look at that back to those levels, that's about 80% back to where it was in 2020 prior to all the run-ups, the pandemic time frame. If you look at Matic's kind of in the same boat, kind of hanging over that cliff. A lot of the major altcoins are, and if you look at these drops, 80, 90% from here puts it at, pre-pandemic levels, which would put it at overall lows. Most of these coins have already dropped about 80 to 90% already, but altcoins take the biggest hit, especially if Bitcoin rallies. They're all pretty much down about 80% right now. If you look at the total altcoin market, let's see where that's at right now. Total altcoin market has dropped about 59% right now. So a lot of coins still have a good ways to go. Ethereum is more in the category of Bitcoin from an institutional standpoint, ownership standpoint, down 59, 60%. So Ethereum in the past, as we well know, has typically retraced 90-something%, just like everything else. 94%. So where would that put Ethereum? If Ethereum dropped 94% from where the peak was, that would put it down around $200 for Ethereum. Somewhere around $200 to $300 would be 94% from the all-time high. So that's where things were in the past. Bitcoin, obviously, 80, 85% drawdowns is what Bitcoin has done in the past. And if you look at that from the $69,000 level, that puts you back at about $10,000, $11,000. Obviously, the 64,000 is the technical top of the market. So 84% from there, again, down to that $10,000 level. So some people have that in the charts and, think that the price is ultimately going to make its way there. And that's going to really depend on this $29,000 level and whether or not it will hold. Right now, we're at 29.1. A lot of people thought we were going to have this big bounce today and that price was going to continue on. And right now it's still ripping to the lower levels. So we might come down and test some of these lower levels, or it could just reverse and bounce. Nobody knows what's going to happen. It's all, a product of leverage in the markets, longs and shorts getting manipulated, and whales playing their games. So you can see the trend, at the end of the day, the markets, traditional Bitcoin, everything is putting in lower highs, lower lows, and taking out previous low ranges. So right now, that's what we need to watch and expect. Even though the Dow, NASDAQ, S&P had a nice little, bounce today, that's kind of what's been happening, right? You get your lower high, lower low, bounce, lower high, lower low, bounce, lower high, lower low. And it's just kind of working its way down with these little bounces just like that. So you could have a multi-day bounce here. But then ultimately, if price drops back and puts in a lower low, it's just a continuation. And these things take time. As we've looked back in the past, the pandemic was pretty fast, but some of these other areas where the prices dropped, 2018, the last time, it took a few months for that to happen. Let's just look at that when the Fed indicated they were going to, start raising rates. It basically took, it was 99 days to get to the bottom there. And right now, barely really into it from when they started announcing, about 100 days, 140 days in from the initial announcements, but really this is where it's all first started taking place. So these things can take some time. Bear markets can take a year or so to a couple of years to work out. So we'll just have to keep an eye on the markets and the Fed and what's going on with inflation and things like that, because they are serious about fighting inflation. That's their number one job right now. It's an election cycle getting ready to come up, and all eyes are on inflation when it comes to the incumbents in office. That's the biggest conversation out there right now for constituents, because it's real, it's affecting people, and it's affecting their ability to spend. So the Fed has to get that under control, as well as the housing inflation and things like that we've been watching. So these are the things I'm looking at today. I will see you on the next video.